Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. We are missing Anuj today and we'll miss him sorely because the markets are in a very interesting position.
Yeah.
The global cues are not looking good because of a raft of weak data from the US. They had a weak PMI market purchasing managers index data. They had a weak Philly Fed, the Philadelphia Fed, Federal Reserve releases data. That was weak. And even the consumer goods data showed a weakness compared to what was expected in terms of consumption. So US reeling under weak data. We also had some dovish noises coming from the St. Louis Federal Reserve governor. We'll play that to you, clearly indicating that inflation is nowhere near where the Fed considers the neutral rate. I mean, all told, it's a weak growth picture that came out of the US, and that's reflecting in Asia. But my sense is that we are, just as we underperformed when the world was doing well, in the last 2-3 days, we are indicating outperformance. Yesterday, the Nifty, the mid-cap index, the small-cap index, all of them ended at the day's high. It was a gradually sloping curve, a little less in the Nifty, but very prominently in the mid-cap and the small-cap index. So that's indicating that there is a momentum. And my guess is that momentum is coming from the fact that the pledge shares problem, which was about 2 weeks ago or even 1 week ago, seen as very serious and could undermine the mutual funds or the NBFCs, is now seen as under control. Now, again, I'll play those bites to you. I spoke to a bunch of experts. They're saying that the underlying difficult shares, difficult instruments are finding buyers. ARCs are buying them, or HNIs are buying instruments which are slightly wobbly at a higher yield. There are buyers. So it's not as big a problem as the market thought it was, maybe earlier this week or even last week. And finally, there was a dovish MPC on expected lines, but that will be a further boost today. So my sense is the broad markets have something to cheer about and definitely less to worry about.
Okay. Lata, morning. Even the numbers are looking good, right? I mean, yesterday, both FIs and DIIs bought in the cash market, albeit it was a small amount. FIs bought about 55 odd crores, but look at the domestic institutional money that came in, 200 crores yesterday, and DIIs have been buying for 7 straight days now. So it is looking like there's some money being put in the markets. Yesterday, the move was led by a lot of heavyweights. So if you look at it, there was a 300 crore delivery buying in ICICI Bank, 600 crore in Reliance Industries, about 400 crores in Tech Mahindra. So let's see whether that trend continues. The important level to watch today would be the 200-day moving average of 10,860. Whether we can conquer that, given that global cues are a tad bit weak, only time will tell, of course. For now, the Dow was down about 100 odd points. The SGX Nifty also indicating a flat to perhaps mildly negative start. But the good part is the SGX Nifty has recovered a tad bit from the lows. Lata, on the MPC minutes itself, I mean, is there anything from a market standpoint, look ahead, so to say?
Well, from the bond market standpoint, the understanding for me is that it was exactly on expected lines. I mean, nothing, it was dovish, the statement. The one guy whom everyone was worried, Viralacharya, why did he vote against the rate cut? His statement is actually pretty dovish. Only thing is, he goes on to say that there are 2 or 3 data pieces like non-core inflation, which is looking, like core inflation, which was high in December. So I want to watch those data for 1 more month. So clearly his statement was that I would have liked to cut in April. So there is no one who is opposing rate cuts. On the other hand, I wanted to pick up Dholakia's statement if we have. Dholakia is the most dovish statement. And he only expects 1 more cut.
Yeah.
So that is the disappointment. While Viralacharya was, more dovish than the market thought, the dovish Dholakia was not all that dovish. He only expects 1 more cut. And everybody in the market is pricing in an April cut after the January numbers. So that's why I would say the extra dovishness of Viral was probably, you know, countered by Dolakya being not all that dovish. So if we have one more cut and only one more cut, that is what the market's taking away. So that's priced in. I don't think anybody in the market thinks otherwise.
Okay, I was reading a Nomura report that Sonal Verma wrote where she said that there's an expectation of another 25 basis points rate cut. More importantly, they don't see a significant build-up in food price inflation risks in February, and the MPC may continue to have a good reason to project that sub 4% inflation. So I think that's the base case that a lot of people are working with. But that's the macro setup and how it's looking. Let's also tell you what our wise experts have to say as we head into trade this Friday morning. Dan Feynman of Credit Suisse says Asia ex Japan's price to equity is now above its 10-year average, and the PE relative to the world is near the average, he says. Their index of leading indicators has fallen from extreme to moderately positive territory. He expects the market to trade sideways in the next quarter, with the second half dependent on the outcome of trade negotiations. He says they reduced their underweight on India.
All right, let's get you some money market views. Bhaskar Panda of HDFC Bank says news of hectic negotiations between China and the US on trade was in the limelight ahead of March 1 deadline. He says soft US data did not deter a little appreciation of the USD. He says global crude prices have remained elevated and are consolidating at higher levels. In India, he adds rally in oil prices is a negative, which has already been showing in the USD-INR exchange rate, but interest in Bharat ETF might be helping the cause of the INR in recent sessions. He expects USD-INR to trade in a range of 71.20, 71.40. That's as flat can get.
Oh, absolutely. Okay, so above that 71 level, Bhaskar Panda also talks about the bond markets. He says the MPC minutes emphasized on growth despite reservations from some of the members on inflation trajectory. Given this background, he expects the 10-year benchmark yield to remain within the 7.5 to 7.55% range for the trading day. All right, it was a slightly weak day for the US markets. In fact, the Dow saw about a 0.5% cut. Sonal is here to give us the world view. Hi, Sonal. Morning. Hi, good morning, Sonia. As you rightly pointed out, the US markets, they saw a weak close yesterday and Dow lost more than 100 odd points. In fact, Nasdaq, that snapped its 8-day winning streak yesterday, and it was because of the weak economic data that all the major indices were spooked. Well, the Commerce Ministry that reported the data, which said that the durable goods order for December rose around 1.2%, but on the other hand, for the core capital goods, the order fell around 0.7%, and there was an expectation of 0.2% increase. So there is something we saw some disappointment. And the Philadelphia Federal Reserve Business Index fell to negative 4.1% in February, and that is the lowest level since May 2016. Moving on to European markets, there also we saw major indices closing lower. FTSE saw cuts of around 61 odd points. DAX and CAC, they were quite flat with a positive bias, and it was the weaker earnings and also weaker economic data that was not doing so well for the European markets. Well, the banking index that led to the losses fell around 1.7%, and manufacturing PMI that slipped to 49.2 in this month. That is the lowest level since mid of 2013. In fact, the composite PMI that rose to 51.4 in the month of February. The Asian markets, they are right now indicating a tepid start. In fact, if we pull up SGX Nifty, that is indicating a cut of around 18 odd points. That indicates a flat to negative start for the Indian markets.
Okay, thank you very much for that. A flat to negative, we can take that. Let's see whether we can build on it on our own strength. But I just want to emphasize more the extent to which the decision makers, especially the monetary policy makers in the United States, are looking at the softness in their own market. We have some statements coming in from the Federal Reserve, St. Louis Federal Reserve Governor James Bullard, a very important voting member. He says there is no need for rate hikes anymore, and he also says that the Fed's balance sheet contraction now needs to come under review, which means they may not contract as originally expected. Very positive news for liquidity, especially for emerging markets. Hear out this important member of the US Fed.
The message, from my point of view, is that the normalization process in the United States is coming to an end. On rates, we've already raised rates about 225 basis points from where they were initially. On the balance sheet, we've got that decision hopefully coming up in the next couple of meetings. So I think we're in a good place today. We've had a lot of success, and people said it couldn't be done. We got the interest rate back up We got the balance sheet, reserves are down 40% from where they were. Basically, I think we're in a very good place today. We've got this muted inflation, no urgency for action. Inflation just hasn't come around. We've put in the muted inflation language. You had 2 years of blockbuster upside performance in the U.S. economy in 2017 and 2018. Everybody was surprised to the upside. We still didn't see any inflation in that environment. So I think that's got people backing off the idea that there's such a lockstep relationship between the real economy and inflation. One of the things that we could do here with this policy is recenter inflation expectations more on our 2% target. They're too low compared to our 2% target right now.
Okay, some people struggling with low inflation and some countries struggling with high inflation. That's, I think, the way it works.